On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice and it doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Please engage with us. We love to get feedback, questions, and comments on this material, and if you enjoy it, please rate it, or even better, share it with a friend or colleague. G'day team, hope you're all well. Let's run through some of the key developments and moves from last week, then let's turn our attention to what's coming up in the days ahead. It was a difficult week for most global share markets. In the US, the S&P 500 fell 2.6%, which is the biggest weekly decline since that week where we first had the Liberation Day tariff announcements in early April. Trade tensions rose late in the week. On Friday, President Trump warned Apple of harsher tariffs on iPhones that were made outside the US but sold in the US, and he also suggested that European trade discussions were going nowhere, and he recommended stiffer duties on the European Union. So important to note that these aren't official policy announcements, they were just posts on social media, on Truth Social, but they did just take the edge off market confidence late in the week, and confidence was already a little bit shaky, so it turned out to be a difficult week for most markets. Many of the other global indices were down slightly for the week as well. The only exceptions were the UK and Australia. They were two of the few indices that managed to eke out small gains. Here in New Zealand, the domestic NZX 50 was down 1.5%. That saw it break a 3-week winning streak. We saw 3 consecutive weekly rises, but last week it gave a little bit of that back. Still up a very healthy 5.8% so far this month in May, which would be the best month in some time. Interest rates didn't move around a lot. The US 10-year Treasury yield finished the week little changed at 4.5%, and here in New Zealand the 5-year swap rate ended the week little changed at 3.6%. Some of the key releases, flash PMIs, was something I was watching closely. PMI stands for Purchasing Managers Index. These are essentially survey-based activity indicators. They cover the month of May, so very current, softer in most regions. And the measures for Europe, Japan and the UK all slipped below the break-even 50 level, only marginally, so more of a stalling rather than a major contraction. The US was one of the few to improve with the composite PMI in the US. Composite means it encompasses both the manufacturing sector and the services sector. So the US composite PMI rose from a 19-month low in April of 50.6 to 52.1. So that was better news, but despite that positive headline, export orders continued to fall. They were particularly weak for the services sector, which does include spending by foreigners in the US. We also saw supply chain delays intensify, and we saw prices charged increase to an extent that we hadn't seen since August 2022, and that was overwhelmingly linked to tariffs, so not all good news in those. On the central banking front, the Reserve Bank of Australia was the highlight, and the RBA did cut interest rates as expected. This was just the second time since 2020. The RBA has moved a little slower than many, but that 25 basis point cut took the policy rate to 3.85%. It talked about inflation. It's pretty comfortable with where inflation is heading to. It does see some potential for a temporary rise as some temporary factors sort of push it up, but it's comfortable with the underlying level of inflation. So the tone of the statement and the press conference were actually a little more dovish than people expected. So markets now see at least 2, but possibly 3 rate cuts over the balance of 2025. And the next move looks likely in either July or August. So the RBA is moving in the right direction from the perspective of markets, which want to see some easing in monetary conditions across the Tasman. Here in New Zealand, we had a dairy price auction. It was pretty steady. We saw the headline GDT index slip back 0.9%. We did see a very strong gain a fortnight ago. The index rose by the highest we'd seen in 6 months, and prices are up just shy of 10% this year and back at levels we haven't seen since 2022. So a Fonterra payout of at least $10 appears to be locked in for this season. The season's just about to end, so we're now looking ahead to the new season. We should get an update on that opening forecast for the 2025-2026 season when Fonterra provides its third quarter update on Thursday this week. So should be pretty good. I think there's a good chance you see back-to-back payouts of $10, which will be fantastic for New Zealand in particular, some of those rural regions. Right, looking ahead to the coming week, and it will be a very busy one, both internationally as well as here in New Zealand. Inflation will be in the spotlight. We've got the PCE inflation report for April due in the US on Friday, and ahead of that we will get preliminary inflation reports in Europe and the Tokyo inflation report in Japan too. But it will be that PCE inflation that takes centre stage on Friday. In the US, this will cover the month of April. PCE stands for Personal Consumption Expenditures. It's a favoured measure of inflation by the Federal Reserve, so that's why we watch it so closely. For the month, headline and core PCE expected to rise 0.1%. That's slightly above March levels. At an annual level, the headline PCE expected to slow to a 7-month low of 2.2%. Core PCE inflation expected to slow to 2.5%. That would be the lowest since March 2021. So good news expected late in the week on the US inflation front. Here in NZ, a couple of things to watch. The most important and the highest profile will be the Reserve Bank decision on Wednesday. This will be an official cash rate decision, an OCR decision, and we'll also get a monetary policy statement, which means a new set of forecasts. 2 o'clock on Wednesday is when it's announced, and then at 3 o'clock you'll get a press conference where you'll be able to get some more information. So the OCR currently sitting at 3.5%. Remember, it hit a high, a 15-year high at least, of 5.5% last year, and they've cut it a bunch of times, so it's gone from 5.5 down to 3.5 today. We're expecting another 25 basis point cut on Wednesday. That would take it to 3.25%. So that would be well down from that 5.5% peak, and it would be the lowest we've seen since late 2022. But this is where things get interesting, because most of the move is behind us now. So once you get down to 3.25%, you're sort of approaching that OCR trough. And that's why the forecast will be so interesting, because we want to know what the Reserve Bank plans to do next. How much lower will the OCR go, and when will it get there, and when might it start rising again? So the forecast will be really key. At the moment, markets see at least one more cut after this week, so they expect the OCR to trough at 3%, maybe go a little bit lower than that, maybe go to 2.75%. So it all depends how things play out, but we're starting to get close to that point where it's got as low as it will go. And then next year, and certainly the year after that, markets see the OCR rising again as you start to see the economy respond positively to the interest rate cuts that we've already seen. So Wednesday will be a real focal point for the local market. Thursday as well, 1 p.m. on Thursday, we'll get the latest ANZ Business Outlook survey for May. Business confidence has held up pretty well in spite of the tariffs and some of the global disruption, so it'll be good to take the pulse of where businesses and firms are at. You've still got some pricing pressures that are evident, you've still got some cost pressures, so a few things to watch in that survey that will be on Thursday afternoon. And on the earnings front, there is a lot coming too. Most of the international companies have already reported, but there are a handful reporting this week, including Nvidia, which reports in the US on Wednesday, so this will be Thursday morning New Zealand time. Salesforce as well, the same day, but Nvidia will be very, very closely watched. Such an important business, so widely owned, such a big dominant company now, so watch out for that one on Thursday morning here in NZ. On the local market as well, very busy across the NZX with the May reporting season hitting its peak, and we will have some of the genuine market heavyweights that will announce results this week. Fisher and Paykel Healthcare, I think they report their result on Wednesday. Yeah, Wednesday. Infratil also on Wednesday. Those two are really big ones. On Thursday, you'll have two other big, closely watched ones, Main Freight and Ryman Healthcare. So those four are very big companies. Like I mentioned, you'll also get a third quarter update from Fonterra that's due on Thursday, and a few other interesting businesses as well in and around those releases. Turner's on Tuesday, one to watch. That's a very good, very well run business that's worth watching, Turner's. So, lots going on. We've got an inflation report in the US. We've got what we expect to be an OCR cut here in New Zealand. We've got business confidence, got a swag of local heavyweights that are reporting results, and Nvidia, which is as big as they come in terms of corporate earnings releases. So, thanks for listening. Always good to have your attention. Much appreciated, and we'll talk again soon.
For more insights, visit craigsip.com.